Create and track cash flow projections. 29% of businesses failed because they ran out of cash, and that's from CB Insights analysis. So what are cash flow projections? It's pretty much your cash balance, that beginning cash balance, and then you're tracking all of the money coming into the business and all of the money going out of the business. It's what's left. So not a profit and loss or not the net income, but we're looking at every single dollar, whether it's a balance sheet item or a profit and loss item. We're looking at all the money that came in and all the money that went out. And so one of the reasons to track cash flow projections would be to answer some of those harder questions or make some smart business decisions. Can you cover your overhead for a particular period? Can you pay yourself? And longer term, is there cash available to invest in the business? So creating that cash flow for projection will help you look into the future. So similar to a budget, where a budget, you kind of sit down and you determine what your targets will be for the upcoming year. You know, you want to spend at least X amount on rent, X amount on utilities, X amount on marketing, and then you set a budget, and then you work towards not exceeding that amount or staying within that limit. That's a budget. But when it comes to projections, it's a little bit different, because now you're kind of controlling the future of how you're going to meet that budget, if that makes sense, and then make adjustments as you go. So an example of a very simplified cash flow projections, we're looking here at just the inflows. So in this example, ABC Company forecasting as of January 13th, we have a $5,000 beginning cash balance. And in this example, it's a weekly cash flow. So you'll see January 14th through the 18th, the 19th through the 25th, and so on. So for the next 4 weeks, we're looking at 5 clients paying $63,000 or collecting $63,000 from these 5 clients during the week of January 14th through the 18th, and then no cash collections for the next week. So this is going to be very specific to your type of business and how you collect money. This looks more like a subscription-based type of business where client payments are due once a month during a certain time of the month. But of course, every business is different. So you may have something every week depending on what product or service you sell. And of course, the amounts may vary. And so this is the outflows associated with the projections, and very dense shortened list here for illustration purposes. So you will look at all of your outflows and look at what time of the month they would come out. So if we go back to that previous example, you see these are the weeks that we're projecting the cash flow, the cash inflows, and then these are the weeks that we're projecting the cash outflows. So in this particular example, this company has utilities, landlord, more utilities, car payments, that kind of stuff, payroll, as you see here, is every 2 weeks. And then all other vendors, I just threw that in there for calculation purposes. But of course, you would have a lot more expenses than the ones listed here. Week to week, when we're looking at week 1, the cash inflows was $63,800. And the outflows was only $10,500. So you have a net cash inflow of the $53,300 plus the $5,000 beginning balance where we started here. So then that will give us an ending cash balance of the $58,300 for week number 1. And so what you would do is just take that ending cash balance from week 1, and that would be your starting cash balance in week 2, and then of course plus or minus any income and cash flow for that week. And so that's how you would track your ending cash balance week to week. And you'll see I have these items listed in red because the software that I use allows me to put in what's called a hot mark or a hot bucket, where if the cash flow drops under a certain amount, and in my case, I believe I have it as 20,000, then it'll show that amount in red to say that, hey, you're below your comfort level of ending cash balance. So you can make this as simple or as complicated as you need it to be for your own business. And then I like this because it gives a visual view of the Excel templates that we just viewed. This would be what the cash looks like week to week. Blue, we have the inflows. So that would be that 53,000 or that 68,000, I think it was, that 63,000 that we collected that first week. And then as you see for the next 3 weeks, no inflows, and then it shoots back up to the 63,000. And then of course the outflows week over week in orange. And then this gray line here shows the ups and downs of the cash balance as you're collecting and making payment.